2017 is drawing to a close. FY18 also will draw to a close in a few months. It's an interesting time to get one of the most erudite minds who has been watching the Indian economic scene for a great deal of time. I have with me Geeta Gopinath, Professor of Economics, Harvard University. She's also, in a sense, in the policy space in India because she advises the government of Kerala. But then, of course, her interests span much beyond Kerala, India, and, of course, extends to the world as well. Geeta, it's a pleasure having you with us.
Thanks, Lata.
Well, for starters, at the end of 2017, one of the best things that we have got is the revival of global growth. In fact, global trade has also picked up. How do you look at this, both these trends, global trade and global growth? Would it be better in 2018?
I believe so. I think there are some very good signals coming out of most countries in the world. This is the first time that we've had advanced economies and emerging markets all have positive growth rates and have a revival of growth. And so this is quite unique in that sense compared to 2016. And so that looks very good, and trade is also picking up. So I think 2018 should be a good year, at least for the world economy.
Is it as promising as 2003, when it was the start of 4 or 5 years of good growth, which we may have later regretted, but it was the start of a great cycle?
It could be. I mean, there are a couple of things that seem to work in the favor of the world, which is one, that commodity prices have started going up, and especially for emerging markets that were big commodity exporters, yes. That's a big turnaround, and so that is a plus. And there's a very business-friendly government in the U.S. With the huge new tax cut plan that we know about, and so that's positive too. And the euro area is recovering, and Japan has actually also been growing faster than expected. So there is a lot to expect that this might continue for another few years.
Okay. So what is your opinion on asset prices and the way central banks have dealt with it? Do you think they could be making the same mistake that perhaps was made during the Greenspan era, when central banks concentrated on commodity inflation or price inflation and didn't look at asset inflation? Do you think global central bank tightening is as good as it should be, or should it get tighter?
So certainly, if you look at asset prices around the world, you might think that this is the beginning of another cycle of a credit boom and bust. But what's different about now relative to in the ramp up to 2007 is there is a big difference in the leverage ratios. Okay. So if you talk to central bankers, what they will say is, sure, asset prices have gone, the stock market is booming, but if you look at leverage in the financial institutions, that's way better than it was before the previous crisis. And so that's the reason why they're less concerned about the stock market, which it is true that the stock market is something that's much harder to predict where it's headed. As long as you've got the right regulation on the banking side and the right amount of leverage, not just on the banks, but even households and corporates, I think it's in much better shape.
Okay. And therefore, would you expect that there would be just these 3 rate hikes that the dot chart indicated from the Fed? Or do you think that with the tax reform coming in, we should be prepared for more tightening?
So this, I think, is going to be a bit of a wait and watch, right? Most economists don't share the opinion of the Trump administration that growth is going to hit 4% in the U.S. I mean, the expectation is it's going to be around 2.5%. So if that's the case, there should not be enough of a backsplash to inflation, and the 3 rate hikes would be what it is. Also, I know that the Fed is of the opinion that real interest rates are going to be in the long term around 1%, a little more than that. So they're not really targeting to get towards the 3% rate or a 4% rate. Okay. So, but we'll see. Inflation is the one thing that I think that's most uncertain at this point.
Okay. So we shouldn't worry that central bank tightening could get a little serious.
I would not at this point say that here.
Okay. All right. Let me come now to India. Yeah. While you have been saying that global growth has been very good and it might continue in 2018 as well, our export growth has not shown that kind of concomitant growth. The November export numbers were better than the previous month, but if you take the year-to-date, we have seriously underperformed our own trend growth and definitely global trade growth. Would you worry?
So to the extent that I believe some of this is the disruption that's come from GST and before that demonetization, I'm not that worried. I would expect that to turn around in 2018. There certainly has been this issue with exporters who've kind of paid up their taxes and they are waiting for refunds, so there's a liquidity crunch, there could be supply chain disruptions. And so I am not so worried about that. But I think India needs to move away from business as usual with exports. It's kind of had, I was just talking to somebody about this, we've had the same portfolio of products that we sell. We're not growing in the export market the way like Bangladesh is in the textile side, or Vietnam is. We're not a part of the big global supply chain. We're not inserting ourselves as a major exporter in the way that other emerging markets are, and that needs to change.
On demonetization, now we are 12 months, even from the end of the demonetization period.
Right.
When you look back, what kind of a cost-benefit analysis will you draw up?
I think the analysis will conclude that it was not a good idea and should not have been done. Okay. I don't see this getting picked up anywhere else in the world. Okay. I understand as a signaling device it was very powerful, that this government was seriously going to go after black money and corruption, and I think in that sense it was great as a signaling device. But I think that the alternatives would have been better in terms of, the GST is just a phenomenally better instrument for getting at black money than demonetization was.
Oh, well, just one more question on demonetization. Since you do take interest perhaps in behavioral economics as well, do you think that we may have some kind of ramification, people tending to save in dollars, those who want to cheat the law, do you think that we have opened the door for other devious behavior because this weapon of demo was raised?
I think that was always the risk. There was one thing about the Indian economy was that it's never been dollarized in the way that many other emerging markets have been. So there was certainly a risk that this policy would do it. I don't think you're seeing that much in the numbers. And given that it was fairly short-lived, I don't really expect that to be a big issue going forward.
Oh yes, it was short-lived, and I guess that was the best part of the disruption as well. Time permitting, I'll come back to the export question, but now to GST. We have seen it disrupt even GDP growth in one quarter, but GDP growth came back to about 6.3%. Do you think most of the GDP disruption, GST disruption is over, and that we are going to see quarter upon quarter of better growth? I
mean, I expect there could be another quarter of growth being subpar. It's sure that growth has bounced back, but it kind of hit, it fell quite, it didn't fall, but it was growing pretty slowly the previous quarter. So I suspect that there's going to be another quarter of this because I think it's still a bit, the implementation still hasn't smoothed out. But once that happens, I'm a big fan of the GST policy, and I think that this will have a very good consequences for the Indian economy.
Okay. Can you elaborate? How do you think it might benefit? 1 year, in FY19, what can we expect by way of benefit?
I think the biggest thing that GST does is it formalizes the economy. Yes. It's going to make businesses have kind of much more, the right amount of paying the right amount of taxes, the right paperwork, which means that you're going to end up with more productive enterprises because they have to find a way to be able to pay these tax bills. That's one. The second thing is this whole amount of transparency right now. Because of this double checking of who's paying and who's receiving the products, it's a fantastic way to ensure tax compliance, and so the combination I think will be very good.
Okay, just one more question on GST. Would you want to see any changes, since you advise one state government and you know it pretty intimately? Are there any changes that you would advise?
I'm seeing a lot of quick reaction to the issues that are being raised. I'm kind of pleased with that. The GST Council seems to be coming up with solutions to it. I think it was excessive to have very high GST rates and have so many slabs. If there's a way they can streamline it and keep it at 18% for a lot of products, I think that would be ideal. And of course, they have to find a way. If you want to formalize the economy and bring the informal sector in, you really just have to make sure that these websites work properly, that people are easily able to access it, that it's not too onerous, the compliance. And those are the kinds of things that would need fixing.
Okay. Well, we have lots more questions on the reason why we are speaking to Geeta, on the major themes for the global economy and the Indian economy in 2018. Those questions after a very quick break. We are back.